tell us a bit about, especially in the last one, your experience with digital lending, how that segment has grown, and especially also around micro lending, which is a big segment, and how your experience in the last 1 year is advising your strategy going into the next financial year. Yes.
So thanks, and I'm glad to be here. When I look at there's a sector which we were not banking, call it maybe 5 years ago, and this is really macro on the side of MSMEs and SME as a general. And why we are not able to reach out to that sector is simply because our channels were really restricted to brick and mortar. You saw in today's results, today we are doing over 98% of our transactions are basically happening outside the branches. And in this number, we have a digital solutions. We have an app which is called Timiza. Through this app, we're able now to reach what you call the mass market. In there is where you have the MSMEs, you have SMEs there, you have individuals who don't want to come to our branches, they want to have a virtual account, and the Timiza platform is able to give them that opportunity. We launched this, I would say, about maybe 5-6 years ago. Immediately when we launched, we saw our customer numbers jump. We had registered customer numbers of slightly over 5 million customers. And throughout the year, we've been able to service them in different forms and shapes. The solutions here are quite wide. So we provide virtual savings accounts, so that we've seen that one picking up. But the area where we have seen significant growth is actually on the lending space. On the financials that we've just released here, you see about 2.1 billion on the digital lending space. And these are short-term loans for 1 month. A customer wants to go and invest in the morning. Some of them by evening they are repaying their loans. But if you look at the tenor, it's only about 30 days. Through this, we're able to reach quite a number of customers, many customers, and they're borrowing small amounts that they need more for short-term purposes. It's not a term loan, it's not a long-term facility. We have seen that it has picked up. We've seen the impact it has actually had in the industry, where you're now looking at mass market, you're actually being able to make a difference, in their livelihood. So a good area, I must say. It's quite cost-effective, for the simple reason that it's virtual, so there's no brick and mortar. We see also challenges in terms of risk in that area as well. But then over the years, we've been able to develop scorecards. We are seeing repeat borrowers, and through these ones, we actually having a higher appetite.
Does that mean also you consider the risk you use the risk assessment in terms of how it advises how you do even the micro loans as well?
Yeah. So we're able to use different, data to be able to score this. Of course, the reference bureau is one that is very easy. You can be able to get this, with ease. It's just your ID, and you can be able to get the score. But then, as we are lending, we are now able to develop scorecards at an individual level. So if you are a repeat borrower, if you are sticking to the terms, you're not defaulting, we're able to then advance more. We're actually increasing an appetite at a customer level.
How is this now advising your investment, especially along those digital lines? How is it advising your investment going into the future? Any mid-term, long-term plans along those lines?
Absolutely. We've seen successes in this. So we started with the traditional savings and lending, products. Now we're expanding this. We are now expanding this to be able to do those array of services that I've mentioned. So payment is big. We are looking at insurance. We should be able to sell insurance through this channel as well. We are looking at wealth management programs. So even that becomes an opportunity, and so many other areas. So the services we've been providing through brick and mortar, we are now expanding and doing significant investments to be able to provide that through this virtual solution.
And then you said 98% of your transactions are now on digital. So then why still invest in the normal branch networks?
Yeah. So it's interesting. We are not in all the 47 counties in Kenya. So that's one fact. So through that, we're seeing opportunities in certain counties where we don't have a presence. And of course, the governors in these counties, they want to see investments. So putting a branch in there, employing people who, majority of them will be coming from within that county, is an area of focus for us. That's what we call ecosystem, driving the county itself. But then we are also having certain areas where the business has picked up so well. The traditional branch that we have there is not sufficient enough. And a good example is what our managing director mentioned, the Isili branch. We've now opened another branch. This is not even a month old. And we already seeing it's vibrant. The business has picked up, and we're actually feeling like we should have done this much earlier. So the physical branches are more to support on the virtual side. But looking at the spending, looking at the customer habits in Kenya, there are still customers who like to come to the branches, more to do with advisory. So we have to give them this challenge.
And talking of loans, we've come from a very tough macroeconomic environment. How did that affect your bottom line in terms of what is the effect on non-performing loans, and how are you going maybe to overcome that going into the next financial year?
Yeah, we've seen our NPL ratios. That has picked up slightly. So our NPL ratio now is about 9.6. Within our credit appetite. If you look at the industry we mentioned, the industry is around 15%. So it tells you, while we've been able to support our customers with our lending picking up year on year by about a net of 53 billion, that's 18% we reported today, it tells you we are lending in a responsible way. But in there, you've seen our impairment numbers picking up. So we have to also account for risk. Because with this kind of environment that we're operating in, high interest rates, high inflation, on the FX side, we saw the strengthening of the dollar. That had an impact. So for that reason, we picked impairment. But there's one important aspect of this. We always say through the cycle, you will always get spikes in impairment. They'll come down, you'll get another spike. If you have to look at it through the cycle, we actually within the appetite that is established strategically.
Maybe finally, what are your projections for the year? Do you see things improving in terms of the macro environment?
No, I think the macroeconomic environment is starting to stabilize. We must say that. We've seen the local currency now has strengthened very much within less than 3 months. So that's picking up. While the interest rate environment is still high, I think once we get stability, you'll start seeing that interest rate also starting to come down. Early days, I must say, so not at this point in time. But then there's been a lot of progress the government has been able to do. Inflation, for example, right now is within the government appetite of between 2.5 and 7.5%. So that's a big tip. And in there now you're starting to see the government looking at attracting investments into the country. So all running with fiscal and monetary policy. So I would say the future is bright.
Okay. Thank you very much.